The Equity Income Fund is there to deliver on consistent income, regardless of what the market's doing, for those investors who need to be able to rely on that income for their lifestyle.
The basis of income generation is based on the same research companies that we followed since inception.
The main difference is we skew a little bit more towards the high dividend payers, those with growing dividend yields, and there's a slight tilt towards the larger cap companies because with those companies we have flexibility to write options. There's 80 or so stocks with listed exchange traded options in Australia.
Rather than waiting for that sort of promise of capital gain, we bring forward that in terms of upfront income to the clients at the same time as reducing volatility.
This is a great fund for anyone who is reliant on income to support their lifestyle, particularly a retiree. If you can generate a consistent quarterly income regardless of market condition and regardless of the fluctuations in capital that you see in the broader equity markets, this means that you won't have to draw down on your capital at inopportune times because that can be quite detrimental to your retirement plans.
We choose the right companies that can withstand the market cycle and generate that sort of yield.
Well, the diversity of income sources is key. The foundation of the distribution for this fund is steady dividends from shares. We should get at least 4%, given our skew to defensive industrial stocks. We can augment that with 2% option income.
At the same time, by usage and harnessing the volatility in the market each and every day, we actually can maintain and sustain that sort of dividend stream over time.
So as a stock approaches what we think is fair value, we can sell a call option, which means we get income up front. Should the stock continue to rise, our counterparty can exercise that option against us and we lose the stock at what is a favourable price. It doesn't get much more complicated than that. And finally, we do realise some capital gains, but we're very careful not to realise more than, say, 1% because we want to see a growing unit price in this fund. We need people to keep up with inflation.